What is up? What is up? It is your boy Derek Pettis, PFS Tax Pros, and we making this video presentation to kind of share with you guys and show y'all some of the ways that we're gonna be assisting in lowering tax bills. And for most individuals, we're gonna be finding ways to maximize, right, and get the best out of their tax returns by utilizing all of the new changes uh, up under the Big Beautiful Bill Act. And we're just gonna go over some of these things that, if utilized properly, these rules can put more money in your pocket this tax season. And we, of course, gonna be here to assist and help make sure that you get these services. So if you haven't already, you want to make sure you grab the link. It's scrolling right below us, right? You want to grab that link, right? pfstaxpro.com/home. You want to go to that link, right? Follow that link, and that will lead you to our website, right? We want you to go over and look at all the information and all the different services and products that we offer, right? But most importantly, you want to book your appointment now. Tax season is approaching very fastly, and you want to make sure that you avoid the rush and avoid any mishaps that you may have by booking in advance and securing your spot, right? And we're going to be making sure that we keep that updated and basically keep in contact with everybody and make sure that everybody has all the documentation and everything they need and they're ready when it's actually time to file. So we're going to go ahead and get into this presentation. And it's a quick overview of some of the benefits and the changes that this bill put in place to benefit taxpayers. I haven't found too many things that were done in the code that will harm you. I haven't found anything actually, but I do want to go over some of the key components that will be utilized by the average and everyday taxpayers, right? So we're gonna get right into this presentation. You might want to take some notes or just save the video, share it. That way you can come back to it and review it and make sure you're up to date on some of these changes. All right. The first thing we want to get into is just asking you guys a simple question. Did you know that the new tax law changes for 2025 could lower your tax bill, right? Maybe even significantly, right? Significantly enough to get rid of it and wipe it out, right? And see to it that you guys actually get a refund. Here's some of the things you should know before you file your taxes this season. And we're gonna just get into this. I'm gonna give you guys a quick overview of some of the things that I pulled out, and then we're gonna dive deep into these things, right? And a little history on it. The bill was passed on July 24th, 2025. The One Big Beautiful Bill Act was signed into law, resulting in changes to federal student aid programs, right? Some of these changes went into effect immediately, while others will go into effect next year and beyond. So basically, a lot of these changes went into effect retroactively, meaning they will be effective this year. And then there are some that will go into effect as we move into the other years. And a lot of times they create these bills and they slowly implement changes so that it doesn't cause too much of a shock to the system. The bill also extends all of the major tax cuts, right? It permanently extends the individual tax rate that the Trump administration signed into law into 2017, which were set to expire at the end of 2025, this year, right? So you wouldn't be able to use them next year. It raises the cap on state and local tax deduction to $40,000 for taxpayers making less than $500,000 a year, with the cap reverting to $10,000 after 5 years. So basically, what this did was this raised, right, the income or the deductible amount, right, for state and local tax deductions to $40,000. It used to be $10,000, and this is going to be for anybody that's making less than $500,000 a year. So we're talking about the top 80% of the country qualifies for most of these cuts, right? And after 5 years, it's going to revert back to the $10,000 that it was set to. So basically, they put into place this extended or raised amount for state and local tax deductions to help to kind of ease the brunt of state and local taxation, right? And this is big because it definitely uh, helps to save in some states like New York and all these states that have state income taxes. I'm in Florida, so we don't have this issue, but it does, put that deductible uh, uh, amount as higher or a higher threshold, right? So now you don't have to be so low income. It widened the bracket to allow for more of the middle class or quote unquote middle class to be eligible for these credits, right? Um, the new deductions and credits, the OBBBA includes several deductions for tips, overtime pay, auto loans, and it creates Trump accounts, which allow parents to create tax deferred accounts for the benefit of their children, all set to expire in 2028. It also includes a permanent $200 increase in the child tax credit. So, we Trump putting the money out there for parents and families, right? They put it in to where that I'm not going to just say Trump, but I'm going to say the administration. They made it to where that a lot of this stuff is now going to be deductible, tips, overtime, all of this stuff is going to be non-taxed up to a certain amount. And they have thresholds. They do have thresholds. So who benefits from this bill, right? First of all, working families are going to benefit from the bill. The bill aims to benefit working families primarily through a series of tax cuts and credits, while also implementing reforms to certain federal assistance programs. So that's a lot said in that paragraph, but what it does is it allows for, if we knew about the past administration and the Inflation Reduction Act that was passed, that bill put in place tax rates that will go up every year starting this year, right? What this bill did was it put a hold on that bill, right? And it kind of voided it, I guess you could say, and it made the tax brackets, right, stay where they were set at, right? And it kind of made them permanent, right? It most definitely held that bill off for a certain amount of time so that our rates wouldn't be going up. It was designed in the previous administration's bill to slowly raise working families' income tax, but this bill puts a halt to that and it keeps the rates where they were last year, basically. So we won't see any more raises in those things. So we should see an increase in tax returns due to that because of the fact that a lot of the money is going to be given back through credits, right? And the tax cuts just won't be going up as they were designed to go in the Inflation Reduction Act. This bill voids and reverses that and keeps everything right where it was, right? Wage earners benefit from this because proponents of the bill project that the economic policies will increase real wages and create millions of jobs, particularly in manufacturing and the energy sector. So these are going to be affected because it's going to create jobs. I mean, if small business owners and corporations are paying lower tax rates, or the tax rates stay the same, they're not receiving these hikes every year, they're going to be able to add on to their employees, right? They're going to be able to hire, right? And that's something that we see becoming a problem that corporations, small and large, these tax rates were on a plan to raise every year. When Trump put that and said, okay, we're going to hold this stuff, the economy is going through it, so let's not raise rates on companies, small companies, whatever, right? So anybody that's earning a wage is going to benefit from this. Seniors and retirees. Individuals age 65 and older may claim an additional $6,000 standard deduction, subject to income limits, right? Helping them to keep more of their Social Security and other income. So what this does is the Social Security, all of the payments that they receive from the government, they withhold taxes from these, right? And what this is going to do is lower the rates under that stuff, right? And it's going to allow them to have an extra $6,000 added on to their standard deduction so that their income phased out, right, is higher, so they're able to receive the tax cuts and the deductions for the income, because a lot of the standard deduction would not cover if you get pension and retirement and all these different things, and you're over that standard deduction, you might wind up with a bill and you're retired. So this just kind of protects seniors and retirees and helping them to have a little bit more room for deductions, right? Self-employed, through permanent tax deductions for qualified business income, immediate expensing of business equipment and R&D research and development costs, and higher reporting threshold for third-party payment forms. So what's happening with this is they basically they made the standard deductions permanent, right? Qualified business income, and they also are allowing, right, for a higher reporting threshold if you're using platforms like Stripe, Cash App, Zelle, any of the third-party payment forms, right? They're letting you report more of that income. A bigger standard deduction equals instant savings, right? Higher deduction amounts, right? The near double standard deduction from the TCJA, right, is made permanent, simplifying tax filing for most Americans. For tax year 2025, the amounts are $15,750, up $3,000 from last year, and $31,500 for married filing jointly. This is also up $3,000 from last year. It lowers your taxable income. As I was speaking on the last slide, these 7 individual income tax brackets, 10%, 12%, 22%, 24%, 32%, 35%, and 37% are made permanent, preventing a new tax increase that would have occurred if the TCJA provision expired, right? Which it was set to expire, and the Inflation Reduction Act would have kicked in, right? And it was going to raise these taxable income rates, right? Or these brackets, right? So this big, beautiful bill actually saves us by lowering your taxable income, which it actually doesn't lower it. It just stops it from rising as it was set to do with the previous administration's bill that they passed, the Inflation Reduction Act, right? It also helps most taxpayers, right? And it's a bonus to non-itemizers, people who don't itemize their deductions, right? Providing a new permanent above-the-line deduction for charitable contributions, and by making permanent a higher standard deduction. So what this does is this basically made a permanent above-the-line deduction, and it changed the game for charitable contributions, because you had companies like Walmart that would donate $10 million, right? And now that's a $10 million write-off, right? So now Walmart shouldn't be receiving the same benefit because they're allowed to write off $10 million, right? They're gonna say, okay, well, if you donate $10 million to Walmart, we're gonna give you less, right, of a deduction, right, for this charitable contribution. And if you're a lower income or lower in the bracket, we're gonna reward you at a higher rate for still providing the charity and giving to others to just help the world coexist a little bit better. All right, tips and overtime relief, right? Temporary relief for this. There's no permanent changes or adjustments made to the code. These are all temporary, and they're all set to expire within a 2 to 3 year period, right? So through 2028, eligible tip workers can deduct up to $25,000 of qualified tip income from their taxable income, subject to income phase out thresholds. Now, you're always gonna see that word phase out, and what phase out means is the higher your income, the less, right, you're able to claim, right? The lower your income, the more you're able to claim, right? And that's kind of confusing, but that's why the tax pros are here. Just get with us, man, and we'll give you the game. Also, through 2028, individuals can deduct the half portion of time and a half overtime pay, right? So the half, you get time and a half, right? So you can deduct the half portion, right, of overtime pay up to $12,500 for single filers and $25,000 for joint filers, right? And this is also subject to income limit and phase outs, right? So I also always want to understand that credits and exemptions, most of the credits, right, they're going to phase out and it's all going to be based on income, right? New car buyers, right? There's a new car and a new deduction, right? Or if you got a new car, there's a new deduction just for you, right? The main benefit of this is the ability to deduct up to $10,000 per year in interest paid on any qualifying auto loan, right? This deduction is available for both taxpayers who itemize and those who take the standard deduction, making it widely accessible to eligible individuals, right? And I'm gonna just go over a couple of these things to help drive this in, right? So we got the EV or the electric vehicle tax credit phase out, right? The act also phases out existing federal tax credits for new and used electric vehicles, right? After September 30th, 2025. This means buyers interested in EVs must purchase them quickly to potentially claim the EV credit in addition to the interest deduction if the EV is US assembled, right? So that's one of the things about this, right? The car has to be 2025 and up. The car has to be US assembled, right? And the car has to be purchased in 2025, right? Second, increased after-tax income. The bill includes other provisions that could indirectly benefit new car buyers by increasing their overall after-tax disposable income, such as raising the cap on the state and local tax, right? Deduction and introducing deductions for overtime pay and tip income. So the new car and the new deductions that you're able to get from owning a new vehicle, right? It's got to be a 2025 vehicle. It's got to be USA assembled, right? So it doesn't matter what kind of car, but if it's assembled in the United States and it's a year 2025 or newer, you can deduct up to $10,000 per year in interest, right? Not interest, not principal, but interest, right? And if we know anything, the first 2 to 3 years of your car financing, you're paying interest. So you're gonna be able to write $10,000, up to $10,000 of that interest every year going forward under this bill. The bill also offers more support for families, right? Tax changes like boosting the child tax credit to $2,000 from $1,500, increasing the standard deductions, and creating new Trump accounts. And the Trump accounts are basically accounts that you are allowed to open for your children, qualifying dependents, right? That will be tax-free, untaxable income. So you're able to deposit money into accounts for your children that will not be taxed, right? New Trump accounts for child savings alongside expanded employer child care credits and better adoption credits. So they're giving money to the people that have kids, right? Because they understand food, shelter, utilities, clothes, everything's getting more expensive. So this administration is finding ways to give back to the community through taxation. And we need to be able to understand and take advantage of all of these different things, right? Moving on to adoption, as we just spoke on, right? And this adoption tax relief allows up to $5,000 of the adoption credit to be refundable instead of just a credit, right? To offset income, right? it is refundable now. So you can get up to $5,000, right? If you have an adopted dependent, right, that will be refundable. You can actually see this on your tax refund if you qualify. If you don't pay it out, we know everything is income limit based, and it does phase out at certain amounts. So this would apply to the same standard deductions and EIC as everything else, and your AGI would determine the amount of this $5,000 that you would receive, right? And previously, the credit was non-refundable, so you could only use it to as like a deduction, right, or an exemption, right? But now it's refundable, meaning you can receive this back as a part of your refund, right? Uh, Meaning it could reduce your tax bill to zero, but you could not receive the remaining amount as a refund. This change allows more families to benefit from the credit, including those who may not have a large federal income tax liability. So if you don't have a liability, you can receive up to $5,000 in a refund, right? If you have an adopted child or dependent, right? And they've been looking out for the seniors, right? And savings for seniors, right? Primarily through a new $6,000 senior tax deduction, or $12,000 for married couples, because it's going to double it up, right? For those 65 and up with incomes under, right? Remember, I told you we always gonna have those income limits where these things begin to phase out, right? So incomes under 75,000 to 150,000, significantly reducing taxes on Social Security for most seniors, and also makes other tax changes like higher standard deductions and credits through some impacts depending on specific income and filing statuses. So this is going to benefit and put seniors in position to actually receive more by taxing them less, right, on their Social Security benefits and all the different things. So, like I said, they withhold on these things. So going forward, they will see a $6,000 deduction or write off, right? Exemption deduction is like a write off from their AGR, their accumulated gross income on the year. So they'll be able to deduct up to $6,000 of this, $12,000 for married couples filing together, right? To just make things better, man. He seems to be helping everybody out, but you got to understand and know these things to apply for them and to receive the benefits, right? And we got the pass-through deduction continues, right? And the pass-through deduction, also known as Section 199A deduction, was originally a temporary measure enacted by the 2017 Tax Cuts and Jobs Act and was scheduled to expire at the end of 2025. The OBBBA ensures that this deduction continues indefinitely. So Trump just took and some of the tax cuts and different things that they changed through Section 199A deduction. It was going to expire this year, but Trump extended it and made it indefinite. So now this deduction, right, will be eligible going forward indefinitely, right, until they change the law, come up with another one to adjust or modify this rule. Charitable deductions for everyone, right? And we spoke on this a little earlier, right? This bill aims to incentivize giving among the general population by introducing the universal deduction for non-itemizers, right? While simultaneously reducing the tax benefits for high income earners and corporations, especially for smaller or regular donations that fall below the new AGI taxable income floor. So basically, like I was telling you, they are not going to let these billion-dollar industries write off millions of dollars of their income, right, through deductions based on charitable deductions. They're saying, okay, you got it to give. So we're not going to give back to you, right? But the middle class and the people that have these taxable income floors, right, specific taxable income floors, right? They're going to incentivize you for saying, okay, my head is badly above the water and I got a little bit to help, right? And I'm going to help. Trump saying, man, if you help and you barely making it, I'm gonna look out for you. I'm gonna give you something, right, to make sure that you're able to benefit, right, at a maximum way from your giving. And the big corporations that should be giving back, they minimizing, right, the way that they're able to uh, uh, advance or move forward or benefit from the charitable donations that they make. Basically, if you got a bunch of money, you should be giving to people. If you barely making it, and if you giving to people, we're gonna hold that high. We're gonna bless you, right, with special deductions and allow you to deduct these and offset your income no matter how much yours are. If are below that AGI taxable income floor, right? And as everything else is, right, they got phase out limits. So, it's kind of designed to help people that make under $500,000, so to say, right? And there's some new rules for people who do itemize their deductions, right? The new 0.5% or half of 1% AGI floor, right? So itemizing taxpayers can only deduct the portion of their total charitable contribution that exceeds 0.05% of their adjusted gross income, which reduces the total deductible amount for many donors, right? So you're only allowed to deduct 0.5%, right, of your adjusted gross income. So if you make $70,000 and you donated, if you make $70,000, 1% would be what? $70, $700, right? 7,000, $700, right? You can write off no more than that $700. 350, that's 0.5%. So it's based on your income, right? The deduction cap for top earners, the taxpayers in the highest federal tax bracket, the 37% bracket, the value of their itemized deductions, including charitable gifts, is capped at 35% of the donated amount. So they can't get any more than 35% of the amount. So if they donated $1 million, they can't write off any more than $350,000 of that donation, right? So that's for the top tax bracket. And this goes down, the lower you are, right? The lower your amount is, right? Or the more your amount is, I'm sorry. Permanent 60% AGI limits, right? Makes permanent the rule allowing cash contributions to public charities to be deducted up to 60% of a taxpayer's AGI, right? A provision that was previously set to expire after 2025. So if you are under the income AGI tax income limit, right, then you can write off up to 60% of what you donated. So let's just say that cap is for $300,000, right, income, right? And you made 200,000, right, and you donated $50,000. You're able to write off 60% of that $50,000 that you donated in a year. And I mean, that's just bonus write off. It's, you gave, but you get 60% back. Right? So it's the gift that keeps giving. You're able to give to make somebody's life better. And the government is saying, being that you're helping us take care of decisions in this country, we're going to look out for you, man, and give you a little couple extra dollars to deduct. Or, if it offset it, you might see it in a return. Moving on to the next one, right? Which is going to be what? What are the action steps that you need to take for this next tax season coming up, right? And they're not going to change. They've always been the same, but we got a couple new credits, exemptions, deductions that are available. So you want to make sure you're on point and you got all your documentation and records together, right? So the first thing you want to do is you want to make sure you gather all your records for new deductions, right? Collect records of qualified overtime pay and cash tips you received, as you may be eligible for new deductions up to 12,500 for overtime and 25,000 for tips, right? With income phased out. So, like I said, like we know, income determines how much of these credits you will receive. So if you on the top end of the eligible bracket, you're gonna receive less of the credit. If you're on the bottom end of the eligible bracket, you're gonna receive more of the credit, right? And there's specific things that put you in these particular places in your bracket. And I advise reaching out, clicking the link below, scrolling past right now, right? Book your appointment, right? And I'm gonna be showing you after we go over your documents, right? In your particular tax situation, right? How to take advantage of the credits, deductions, and exemptions offered in this new bill, right? Employers may provide this information in box 14 of your W-2 or via an online portal, right? So this is going to be stuff that's going to be on your W-2, but you definitely want to make sure you gather all your records, social security cards, photo ID, utility bills. You might need your bank statements. If you're self-employed or run a small business, you're going to want to have your proof of income, profit, loss statements, right? Second, right, you want to track auto loan interest, right? If you purchase the new U.S. assembled vehicle this year, 2025, keep records of the interest paid on the loan, right? As up to $10,000 may be deductible, subject to income limitations, right? So the way we're going to be able to get you credit for this by having the records, right, the documentation, because we can put whatever we want, but we want to be able to document this, and you want to use those records from your loan to show the interest and the payments that you've made for the year, right? Thirdly, what you want to do is you want to plan your charitable contributions, right? You want to base that on where you fall in the income bracket, because as we see, the higher earners, less deduction. Lower earners, higher deduction. If you're a higher earner, you kind of might want to do the math and make sure this works out for you. I'm not telling you not to give, because giving is the way to receive spiritually. You know, if you do good on the people will do on to good onto you, right? But definitely, you don't want to get some credit from the government for what you're doing. And I advise, people that barely make it, some of the money that we throw away, throw it to the side. Tithes, tithes is charitable contribution. Any clothes or anything like that you're giving to the Goodwill or any of these programs that take stuff to give to the homeless or the people that are in need, any charitable donations, right? The cruise ships, if you take these cruises, Tom Joyner Cruise and these other cruises, a significant portion of those fees that you pay go towards a charitable contribution, right? And you receive a receipt. So keep those documents. We can get you credit for that, right? Next, you're going to want to utilize the new senior deduction, right? If you're age 65 and older, you may be eligible for an additional $6,000 deduction, right? $12,000 for a qualifying married couple, right? And in addition to the existing senior standard deduction. So with this, we may even be able to see seniors with part-time work or small business owners receiving tax refunds, because this is a deduction that can, change that AGI. And if you're having withheld taxes withheld from your payments from the government, you can see a return from that. So you want to make sure you utilizing that and just keeping all your documentation. Last, you're going to review your health coverage decisions, right? The removal of the premium tax credit, right, the PTC, recapture limit means any excess advance credit must be fully repaid, right? Be mindful of income fluctuations and communicate with your tax advisor to estimate likely tax outcomes. And this is going to be state to state determined. You know, some states require you to have health coverage, some states don't. So if you do have health care coverage and there's some funds that need to be repaid, you're getting work from your job, workman's comp, or any of that stuff that has to be repaid, make sure you're keeping your documentation and you're going to be prepared, right, to submit and file accordingly. And that pretty much wraps it up, man. I hope I was able to clear up a lot of the misconceptions about the Big Beautiful Bill Act and actually inform you that this bill was put in place to help the everyday taxpayer, not the top 1%, but the everyday working Americans, right? So if you want to, as it says on the screen, get the refund that you deserve, you want to make sure that you are staying informed and file smart, right? These new rules could increase your savings this year, right? So what do you want to do? You want to make sure that you go ahead and book today, right? PFSTaxPro.com home is where you want to go. That's our website. You can find us on YouTube at PFS Tax Pros, LinkedIn at PFS Tax Pros, Instagram at PFS Tax Pros, Facebook, I believe, with Pettis Financial Solution, which is the PFS and PFS Tax Pros. TikTok is going to be my name, Derek Pettis. And WhatsApp is by the phone number. If you got the number, go ahead and reach out to me. But y'all make sure, man, y'all like the video, subscribe to the channel, click the subscribe, turn on the notification, because I'm going to be sharing tips, right, and strategies that are going to help you to make sure you get the most out of your tax return this season. And that's it, folks, for this presentation. I'm Derek Pettis. Y'all can just call me DP, though. I'm signing out, and I am the PFS Tax